Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 3rd of October 2025. The first chart is the US Dollar Index Futures, which closed slightly lower this week as an inside bar and above what has proved to be the important level here. Overall, the markets continued to trade in a sideways range. It's a relatively narrow range, and it's centered around the lows of the longer term trading range in here. The market continues to look a little weaker than stronger, but it is holding on, and you have to be aware that a reasonable amount of volume has gone through over this recent period of sideways trading, and the market has held up despite all these poor closing bars, these low closing bars in here like this. And that means that there's sufficient demand in the market to hold the market up. If that was all weakness, all selling pressure, the market would have broken down by now. It would have overwhelmed the buyers, and that hasn't happened. So there is sufficient demand in the market to maintain its place. It's looking vulnerable, but to maintain its place at the lows of the longer term trading range. I've said before it may need a catalyst of some sort to force price lower, but at this point, this week's bar would suggest the market would like to go higher, or at least attempt to. Narrow spread, inside bar, closing in the middle on below average volume. That would suggest the market would like to go higher. It seems counterintuitive to how the market is actually looking, although you have had strength on this bar when it dipped lower and recovered, an up bar in response with a little test for supply below the previous bar's close, and then a true test for supply on below average volume. It does look like the market would like to go up here. It seems counterintuitive to all of these weak closing bars through here. So we'll keep an open mind for the minute and just see how this plays out. A little bit of weakness this week in the US dollar, closing lower than the previous bar's close, did see many of the associated markets move higher in response. E-mini S&P, this is S&P 500 index futures. They closed slightly higher this week. They only closed a little higher than the previous bar's high, but they did close above the previous up bar's high. We'll consider this a test for supply with a little over-enthusiasm in the top, and you've had a reasonable push higher then on average volume, so genuine trading, no anomalies in there. Spread wasn't particularly wide. The market's not looking weak. It's not looking particularly strong, but it's certainly not looking weak. US Treasury 10-year note futures. They continue to trade inside the range of this widespread down bar. They have done for quite some time now. The market has developed a bit of a pressing nature towards the upside more recently. The market hasn't been strong enough to reach the highs of this range, certainly not yet anyway. Following this up bar, there was 3 down bars in response. They came and tested the breakout line here. It's a minor breakout line within the range, and there was sufficient demand found to see a slight up bar in response. It wasn't a particularly strong up bar, closing in the middle on below average volume, but there was an up bar all the same. Possibly just trading the inverse to the US dollar. We'll see. But at this point, some moderate demand has been found at this previous breakout line. This is copper price futures. And copper price futures have started to push higher last week. The market pushed higher but closed mid-bar. There wasn't really any serious testing for supply in response. The market just moved higher and well above the previous bar's high, which is always a moderate positive for the market. Volumes have increased last week, and this week still above average, but a slight reduction, showing you that selling pressure has likely eased in this market. The spread increased, volume reduced, close was positive right up near the bar's high. This was a lack of selling pressure in the market and price pushed higher with relative ease. Gold price futures. Gold price futures moved higher again this week with an increased spread over the previous week. Volume was up pretty high. It's increased the last 2 weeks. You'd probably like to see a test for supply in response, at least intra-week. You can see there was a little test for supply this week in there below the previous bar's close prior to the market pushing higher. With volume getting up to these high levels like this, well above the average, you'd probably like to see perhaps a bit of a deeper test for supply prior to any continuing push higher. This can happen over a couple of days in here and then the market move up. But a little bit of a test for supply like this is always healthy for a market. It absorbs any selling pressure from those who are short-term traders, gets them out of the market, at least temporarily, and that allows the market to continue high with relative ease. If the market's constantly battling with short-term traders, it makes it more difficult. This market's certainly looking strong. There's no obvious signs of weakness in the market at the moment. However, it is looking a little overstretched in the near term. Silver price futures. Silver price futures also moved higher this week. You can see that there was a test for supply below the previous bar's close last week. That's always a healthy sign in a market. Volume was very high in this market as well, and spread narrowed, so there perhaps was some selling pressure in this market. And that's showing you that with all that very high volume, the market couldn't make much ground higher because there was selling pressure coming in that needed to be absorbed. And that kept the spread narrow. So just be a little bit aware, at least in the near term, it may be that this market also needs to come back and test for supply a little bit, remove some of those sellers, perhaps come back a little bit like this and attempt to remove some of those sellers prior to any attempt to continue higher. It is just something to be aware of anyway, that volume was pretty high this week, quite high, well above the average, but spread wasn't that wide at all. In fact, it was narrowed over the previous bar. Something to be aware of anyway. Like crude price futures, traded lower this week after pushing higher the previous week. This market's been trading roughly sideways in a range for some time. When the lows of the range do get exceeded, we've seen demand come back in, and you would expect to see increased support down at these levels if the market did take a tumble a bit deeper. But we've seen this market trading sideways for some time in this relatively narrow range, and it won't surprise me at all to see the market move back into this range again in the near term. Into the currencies now. This is the euro-US dollar currency pair. The market's traded sideways this week, just slightly higher, with a relatively narrow spread range on a slight increase in volume, but below average volume. So there was lackluster trading in this market this week. In fact, this market's been trading roughly sideways for 9 weeks. Sideways in a very narrow range. There's no impetus for the upside. There's not enough weakness for a breakdown. This week's bar was an inside bar with a slightly higher close. It was a nothing bar, to be honest. It's showing you there's not enough demand to push it higher, but there's no weakness in the market to push it lower. At least it wasn't this week anyway. See what the pound is doing. This is British pound currency futures. They also traded with a relatively narrow spread up bar, didn't challenge the highs of the range. This market's also been trading sideways in a relatively tight range for an extended period of time, mirroring, I expect, the US dollar to some extent, just trading the inverse of it. Volume has been below average the last 3 weeks. This is also lackluster trading in a sideways market. A break below this level or a break above that level will probably see the market trending again. But at this point, the market's trading sideways. Japanese yen currency futures. And after breaking below previous support here last week, the market's attempted to recover this week and closing back at this level. It may prove to be some form of shakeout. We'll see. It doesn't look like it. It looks more like a dropping below previous support on low volume and a modest recovery. The close off this week's high isn't particularly strong, and it suggests the market's actually just holding on here at the moment, and it's looking a little vulnerable overall. Aussie dollar currency futures also traded with a relatively narrow spread this week. It was an up bar, but it wasn't a strong up bar. Volume was increased, but below the average. All these currencies are showing lackluster trading in response to this week's US dollar bar, which was effectively a test for supply. And none of these markets have pushed higher in response to show any great intent. They've just floated higher on relatively low volumes. And perhaps that is a sign that the US dollar will attempt to move higher, because none of these opposing currencies are showing any impetus to move higher. They've just floated higher on low volume, looking more like they're ready to turn around and move lower in response than they are to move higher. Bitcoin futures accelerated higher this week on relatively low volume. That's generally a sign that the selling pressure in the market has reduced, and that allowed price to push higher with relative ease. The market pushed past the previous high in here. It was an intermediate high or a minor high within the range, and it's closed above the recent highs of the range through here, only just above. This is not a breakout. It may prove to be an attempt to break out, but at this point, the market's just come up and poked its head above the highs of the range. It's nice to see the close above there. We'll just have to see how the market plays from here. You'll often see a push higher, a retest, and then a response. You could just see an acceleration higher. That's less likely, but always possible. And if there's weakness in the market, you may see the market come back to this level in here prior to a push higher. So we'll see how the market plays it. It's not a breakout. It may prove to be an attempt to break out. We'll just have to see how the market plays. The low volume suggests this wasn't a strong push higher. The market really moved higher because there was a lack of selling pressure in the market. So you may see the market just trading level with the highs of the range and absorb some supply for a period of time, sort of in this level for a brief period of time before there's any attempt to continue higher following that. This is a relatively important level through here. The highs of the range breaking out to fresh new ground. And you'll often see the market spending a little bit of time absorbing supply at that level, because supply is generally drawn out when the markets attempt to break out into fresh new ground. So we'll see. Plenty can happen just here. It's an important level, and it's certainly worth watching. Just back to the US dollar index futures quickly. you can see the market has traded sideways for many weeks, showing a vulnerability to some extent with all those low closes through here. But more recently, this bar that dipped lower in the form of a shakeout with a test for supply to follow and then a push higher and almost up to the highs of this mini range, which I've marked by this bar's close. And price came back inside the previous bar this week, mid-bar close, low volume. This is a test for supply, and if it's successful, it will attempt to push higher, whether that's just up to the highs of the range or to actually attempt to break out from this narrow spread range. We'll see. But it does look like the market would like to move higher. That said, a failed test, if the market just moved lower from here, is a sign of weakness in itself. So what happens here may prove to be important for this market. It looks like the market may like to go higher. We'll just see how it responds. Okay, thanks for your time. Back again next week. Thank you. See ya.